Hello guys, welcome back to my channel Accountancy. Here I am with the Dissolution journal. How the journal is to be transferred to the journal and for the different transactions held by the firm at the time of the dissolution. The point to be referral over here is sometimes in the exam there is a question where you have to prepare only the realization account, or another case you might find few journal on the dissolution in your exam. So here we are with the dissolution journal transactions, and regarding these transactions you will get to know that how these are to be taken to the different accounts and which accounts are to be debited or credited. So let's start with here. A and K were partners sharing profits and losses in the ratio 3:2. On 31st March 2024, they decided to dissolve. And first of all, we will take the assumption that assets and liabilities existing in the balance sheet have already been transferred to realization account when you have to put the given transaction to your journal. So first transaction given over here is furniture of rupees 70,000 was sold for rupees 68,000. Right. So you know very well that now from your dissolution long questions that furniture has already been transferred to the realization account, because it has been already transferred to this account. So when we are going to make a sale of our asset, we will receive the money, and in exchange of money, what is going out? Furniture, but we can't write furniture over here. Which account is to be credited at the time of the dissolution is realization account. Assets are sold through the realization account. So that's why we have credited the realization account. Now already told in the long questions that the book value of the asset is not to be taken when you are selling them, rather their sale value is to be considered. Here the sale value is 60,000, but the auctioneer who helped us in auctioning the asset charged from us is 2,000. He charged from us 2,000 means how much net value we have received here, that is rupees 66,000. So here bank account debit with 66,000 and realization account also credited with rupees 66,000 here. So being furniture sold is the narration here. Now the point to remind yourself that whenever you are selling something, the selling expenses are given a deduction. Whatever name is of the selling expense, that is always deducted from the sale value. So this is the first transaction which we have done over here. Now the second is out of the stock of rupees 80,000, K took over 50% of the stock. The point number 2, working note number 1, 4 point number 2, that is the stock which was of valuation of rupees 80,000, 50% of the stock is, that is 40,000, and the rest 50% would be 40,000. 50% means half and half. Half is taken over by K at a discount of 20%. So after deducting 20% from 40,000, he took it at this value. So the discount was 8,000. At what value he took is rupees 32,000. Right? So what value K's capital account has to be taken? That is with rupees 30,000, because he took over the asset at a discount. Discount is deducted. Now, what has happened, similar to the first point, the asset is going out. Now, the asset is going out, that means realization account is to be credited. But here, which person is taking the asset? That is K. K is the partner of the firm. So, we have not received any of the cash. Rather, who is the receiver for the firm? From the firm, who is taking asset? K. So for the firm, who is the receiver? K. K's capital account debit to realization account with rupees 32,000 at the realizable value being stock taken over. That is the narration we will write over here. But this point is now half done. half is still pending. What is the pending point? That the remaining was, what was remaining? That is 40,000 that was sold at a profit. Now profit means plus at a 30% on cost. Most of the students confused with this point. What is 30? What is percent? So remember always 30 goes here. Whatever value is given, that is the first one. And the percentage goes to the last one. What is the percentage? That is cost. If the cost is 100, right? If the cost is 100, then profit is given 30, right? So what would be the sale value? That would be 130. Now in the given case, what is the cost? That is 40,000. We need to find out its sale value. You can either take direct 30% because it is on cost. Direct 30% would be 12,000. Add that 12,000, you will get 52,000 realizable value. Another option here is, if the cost is 100, then sale value is 130. If the cost is 40,000, what would be the sale value? Cross multiply 40,000 into 130 divided by 100. The sale value is 52,000. Whichever way you want to go, you can carry on here because here is only above value. So, what is the sale value? 52, and it is sold, right? It is written sold off. So, the same journal as we passed for the first one, bank account debit to realization account, asset is going out and the money is received with the rupees 52,000 in this case, being stock sold. So that is your narration, ended with the second point here. Now the third point is a bills receivable of rupees 3,000 under discount. Bills receivable under discount means we received a paper which we got the money from the bank. Bank gave us rupees 3,000. Discount means we took that paper to the bank and bank gave us 3,000 and kept the paper with themselves. Now on the due date, it was dishonored. The acceptor has not made the payment to the bank. So the bill was met by the firm. What actually had happened over here? The bill payment was met by the firm. That means the payment which was used by A and K have not been received by bank from the acceptor, right? So now bank would hold the collars of A and K that refund that money. So A and K, that is the firm, has refunded the money to the bank. So here for the third point, what journal will go to bank account because money was used by the firm against the paper. So now it is refunded by the firm. For how much value? 3,000 rupees. But which account is to be debited here? I have told you that liabilities would be paid from the debit side of the realization account. If asset is sold, money is coming in to realization. If liability is paid, realization would be debited to bank account, being bill discounted met by firm. Right? So this is the narration. This is ended over here with the third point for 3,000. Now in the fourth point, I have written same as the point number third. So same as the point number third till this wording, right? That there was a bill of 3,000 which has to be met by the firm. So first entry would go same, that realization account debit to bank account. Firm have to make payment to the bank for rupees 3,000. Now after that, what is written? Only 30% could be recovered from the estate of the acceptor. What has happened? That bank we need to pay, the firm need to pay full 3,000, but who was liable to make the payment of the bill has given only 30%. So here for the second part we received a value of rupees 30%. So it is 3000 30% which is received by the firm from the acceptor. So which account is credited? Realization account with rupees 900 being bill discounted met and being money received against bill discounted. Now point to be seen over here. If nothing is realized from the acceptor, full amount is paid by the firm. If something is realized from the acceptor, what you have to do? Realization account, debit side, full value payment, credit side, you will realize whatever is paid by the acceptor. Okay? So this is the point for your bill discounted, but some money is recovered. For recovered money, we debited bank and credited realization account. Now fifth point, loan from the bank. Loan from the bank. Now the point to be noted over here, loan from the bank is an outsider liability. So all the outsider liability like creditors are transferred to which account? Realization account. So that means loan is already laying in the realization account. Now it is paid. So when loan payment is to be done, which account is to be debited? Realization account. And from where they have, like over here, we have made the payment of bill discounted. So realization account debit to bank account. We will not write here loan or interest. We will write only realization to bank. How much was the value of loan? 2 lakh. With interest 2000. How much total we paid was 2 lakh 2000. Here the journal will be passed for the total value. Realization account debit to bank account being loan paid along with interest, right? So this is the payment which was made by the firm. Now the next is 6th point. In the 6th point he says A's loan. Who is A? That is a partner. Now partner's loan is never transferred to realization account. Never transferred to realization account. So if it is not transferred, but now it is paid, what is going out from the firm's case? That is money from the bank. How much value? 60,000. Now the question says it was partner's loan. Partner is not outsider, so it is not existing in realization account. So which account is to be debited? That is A's loan. Which account we are debiting here? A's loan account. The partner's loan account is paid at that time. Its loan account would be debited, not the realization account, being partner's loan paid by the firm. So this is the last journal we passed over here. So that is how journal is to be considered. If assets are sold, bank account debit to realization, partner is taking over the asset, partner account debit to realization, any liability met by the firm, realization account debit to bank account, any liability realized later on, bank account debit to realization account, and if the partner's loan is paid by the firm, then A's loan or the partner's loan account debit to bank. So here we are done with the 6th transaction. In the next video we will carry on with the few more transactions, how they have to be dealt in the journal. Thanks for the day. Accountitude, like, share and subscribe. Keep scoring.